In this video, we will go over a price prediction for Tesla stock, where I think Tesla is going this week. Now, this is a more important week to pay attention to than others, because we do have delivery numbers that will come out not this week, but the following week. So depending on what we see this week is going to tell us a lot about the markets and where the markets think Tesla deliveries are going to be. We'll talk about that a little bit more if you are confused. We will go over the technicals. We will look at where the market is at in a cyclical sense. Are we getting ready for a pullback in stocks? We'll look at a bunch of different indicators that are suggesting maybe we might see a cool down to stocks. Then again, does that mean Tesla has to fall? Not exactly. We're going to look at the calendar as well. What kind of important economic events do we have this week? And I'll tell you right now, it's going to be quite a slow week. We will also look at the option positioning in Tesla stock and much more. Let's go ahead and get into it. As you know, there's two things that really affect Tesla stock: Tesla specific news and the broader markets. Tesla could have nothing going on and fall 4 or 5% because stocks are falling. That has nothing to do with Tesla, nothing to do with Tesla's business. The investment thesis did not change, but some bad data comes out. That's why I like to look at the calendar every single Sunday, in this case Monday, for you guys, because you need to know what the major events are for any given week. And obviously stocks are not trading today. So the first day we're going to look at is Tuesday. You're going to have Chicago Fed National Activity Index at 8:30 in the morning, the S&P Case-Shiller Home Price month over month and year over year, House Price Index month over month, House Price Index year over year, Dallas Fed Manufacturing Index. This Dallas Fed Manufacturing Index and the S&P Case-Shiller Home Price, those are going to be probably your biggest data prints for a majority of this week. So there's not a lot that we're actually going to get, hence why I said it's going to be a slow week. Now, you will get a 3-month, 6-month, 2-year, and 52-week bond auction that will happen as well on Tuesday. You want to watch these bond auctions this week because there's going to be quite a few of them as we are rounding off 2023. And depending on if demand comes in good or bad, if yields fall, if yields rise, that will have an impact to stocks as well. Now, on Wednesday, you're going to get Richmond Fed Manufacturing Index, Richmond Fed Manufacturing Shipments Index, and Richmond Fed Services Index. Dallas Fed Services, Dallas Fed Service Revenues will also come out. This data comes in at 10 o'clock in the morning on Wednesday. So also expect some move around that time, but I'm not really expecting all too much. The biggest bond auction up until Wednesday is going to be this 5-year bond auction on Wednesday at 1 p.m. The 5-year bond auction is somewhat important because it's not quite a 10-year. It's not a 2-year. The 2-year is highly dictated and correlated to Fed policy. The 10-year is not. The 10-year is more open to market's interpretation of where yields will go over the next 10 years. 5 years is somewhat in the middle. So I'm expecting to see a big drop in 5-year bond auction interest rates, the results, but we'll have to wait and see. If the yields fall, that's going to be likely great news for stocks. On Thursday, you are going to get initial jobless claims, probably going to be the biggest, more hard data that we have this week. That'll come out for the week of December 23rd. You're expecting 210,000 initial jobless claims. This is one thing that you want to watch if you think a recession is coming, if you are a bear in this market, because I've talked about this plenty of times, but what actually causes stocks to fall? It's usually not the recession. It's usually the data that says you're going into a recession. So if you start to get data that's formulating this thesis that we're heading into a recession, that's a problem for stocks. That's why stocks will sell off. That's what happened in October of 2022. You were not in a recession, but stocks sold off because it looked like we were heading into one. Now, initial jobless claims will be one of the first things that starts to spike if we are actually heading into a recession. So that's a big one we want to be watching for. We will also get retail inventories excluding autos month over month. You're expecting negative 0.7%. That could also be pretty important. And wholesale inventories month over month for November, expecting negative 0.2%. Pending home sales month over month and year over year come out at 10 o'clock in the morning on Thursday. Also, lots of oil data, not really expecting that to do much at all. And then a 7-year bond auction. Again, same thing there. It's not a 2-year, it's not a 10-year, it's somewhere in the middle. So it is open for market's interpretation of where yields are going to be. Last we knew, 7-year bond auction came in at 4.39%. If you come in lower than that, great news. Higher than that, bad news, simplest way to put it. On Friday, you're really not going to get anything. So this week is definitely going to be a slower week. We really don't have any big hard data. So I'm not expecting any of this data is really going to have that big of an impact to our markets or to Tesla. Initial jobless claims, again, some of those Fed data reports could give us a move, but I think it's unlikely. A long investor writes on X, what is left in this market rally? About 10% is available. Before the price gets to 510 on SPY, start preparing for the decline. So a lot of people are starting to say, stocks are at the point that you should start to see some form of sell-off. Now, here's where things get interesting, because a vast majority of the market weighting of the SPY, or especially the triple Qs, are just concentrated in the top 10 or so names. You could theoretically see a sell-off in the index in these 10 names, pull the index down, but see the rest of the stocks actually do well. These would be more so your interest rate sensitive names that would benefit from avoiding a recession in 2024, in which I believe is going to happen, and more rate cuts from the Fed. Currently, markets are pricing in 6, almost 7 rate cuts for next year. So if the recessionary data just really doesn't materialize heading into 2024 and in the beginning of 2024, stocks are going to do much better than what a lot of people expect. But again, probably not the indexes, because the top 10 biggest names in those indexes do not benefit at all from the Fed raising rates. You could make the argument that they actually get hurt from the Fed cutting rates because their cash is no longer going to earn 5%. Whereas we talked about this in other videos, IWM is breaking out and it's still down about 17% from all-time highs. So in my opinion, the only thing that makes sense to be buying right now or to be investing in for 2024 is a stock like Tesla that's their whole business is basically dependent on interest rates. Let's be honest. If rates went to 20%, Tesla theoretically wouldn't hardly be selling the fraction of the cars that they are. Tesla's business is heavily correlated, dependent, some would say, I would say, on interest rates. So as rates fall, Tesla will do better. Markets are not retarded. They're not stupid most of the time. They will eventually catch on to what I'm saying here. And then everyone will start to buy Tesla. Now, that could start this week, but there's not a guarantee of that. Also, small and mid-cap stocks will benefit because they're most of the time heavily indebted. Their multiples should expand, but Tesla's really in a prime position because their literal business is dependent on interest rates. As of December 18th, so about a week ago, year to date, 65% of large cap fund managers are underperforming the S&P 500. So especially heading into 2024, there's going to be a lot of catch up that these fund managers want to do, need to do just to keep clients, meaning that a lot of money is probably coming back into our markets, and Tesla looks like the most attractive place to be. I mean, it's simple. Do you want to buy Tesla down 40% from all-time highs that will benefit from rates going lower, or do you want to buy Apple or Microsoft at or near all-time highs that will be hurt from interest rates going down in 2024? You tell me down below in the comment section. As I reported in the last video, Friday's option activity in Tesla was noticeably bullish, 75% positive to be precise. And that's a huge amount heading into the last week of any given year. Usually this is a period of time you see a lot of hedging taking place, not a lot of bullish bets being formed. Now let's take a look at the bubble chart for this week in Tesla stock, where the option positions are truly at. And I don't think this is too much of a surprise. It tends to look the same almost every week, but the calls are definitely winning out here. Just on Friday alone, you had 2 times as many calls being bought for puts. But if you look at the largest strike via open interest, that is at the 260 call with open interest of 23,000, volume on Friday of 75,000 contracts. So the bigger the circle here, the more volume that you are seeing, the more open interest that you are seeing, the higher the circle is. So these red dots down here, these red circles, I mean, there's really hardly any activity there, right? The largest red circle you are seeing is the 255 put with open interest of 6,000 and volume of 28,000. Like, these just don't hold a candle to the calls. The next highest call up here is the 270 call, which has open interest of 21,000 and volume of 40,000 on Friday. The 265 call, open interest of 14,000 and volume of 32,000. The 255 call has open interest of 13,000 and volume on Friday of almost 46,000. The 257.50 call, same thing there, open interest of 10,000, volume of 32,000. And the 262.50 call has open interest of 6,200 with volume on Friday of 53,000. So it's clear the bulls definitely want to push Tesla stock higher in this upcoming week. What's very interesting, Earnings Whispers is reporting that unless someone that hasn't scheduled earnings reports earnings, it will be the first time since at least 1997 that not a single company with analyst estimates reported earnings during the last week of the year. Literally nothing. So yeah, it seems like to me in this upcoming week, without any big data or any big earnings, we will really truly get to see how investors feel about our markets right now. Not just investors reacting to a bunch of different news or different earnings out there. With that being said, this could open the door for Tesla stock to move higher. The trend has been bullish. The trend has been an upside move. Now, we have big resistance around 258. And to the contrary, unfortunately, good data or, good earnings, right, for different bellwether companies can have good or bad effects on Tesla. So we're not going to have much of an effect here for Tesla. So that's maybe a little bit of a drag on Tesla's stock. Now, obviously, we could get news from Tesla this upcoming week. That is something I cannot forecast. But from my perspective here, I really don't think this week is going to be a big mover. I do believe we might get above 258 into the low 260s. But in the grand scope of things, that's a very small move relative to what Tesla can do. That would be like a 3% move this upcoming week. That's really what I'm expecting for, Tesla stock from here. You could also say Tesla could move down about 3%, just given there's not too much happening. That would put Tesla stock back to about 245. Either one of these scenarios makes a lot of sense to me, but I'm not expecting some form of big crash event. Also, I'm not expecting some form of big rally event either. But if the markets do start to anticipate potentially a, beat to delivery estimates for whatever reason or not, maybe they watch the last video that was put out and they're bullish on Tesla stock now for Q4 deliveries. Who knows? Then Tesla stock could start to break into the mid 260s. If Tesla were to break into the mid 260s, that's a really good sign that delivery numbers probably going to beat the estimates. But again, you could also make the argument there's 10, 15, 20 trillion dollars of investable capital that is not in our markets. And if 65% of fund managers are underperforming the markets, they don't want to miss out again in 2024. You underperform once, okay, it's not great. You underperform twice in a row, you really start to lose clients. And most fund managers underperformed in 2022 as well. In 2023. You cannot afford to underperform in 2024. So you could also make that a theory as well, that maybe more money does come into a stock like Tesla this week, just because funds don't want to underperform in 2024. All in all, I'm really not setting my sights high this week, although we could be pleasantly surprised to the upside. I think that's more likely than a surprise to the downside. Again, considering IWM's chart looks like this, I do think stocks under the surface could actually do very well this week, but maybe the index does not, or maybe just doesn't do much. But IWM, small mid-cap stocks, maybe a stock like Tesla can actually move this week. I don't know. There's a lot of different variables, different things that are going on right now in our markets. Tesla's RSI is notably lower than the indexes at 58.14, so pretty much neutral. Your MACD is also positive. Looks like curling to the upside. That should also be a good sign that we're probably not going to plummet here soon. But then again, we're kind of vulnerable to any news that Tesla gives us every single day. Saxena says on X, this rally in the S&P depends on a soft landing. If we get a recession, this will turn out to be the blow off top before the recessionary slide in 2024. As this chart shows from Goldman Sachs Global Investment Research, S&P 500 performance at the start of Fed cutting is positive unless the economy enters a recession, which I should also point out, this week is called the Santa Claus Rally, or at least this was initially the Santa Claus Rally after Christmas through January 2nd. So most of the time, stocks do end up performing well during this period of time. It says even during the 2022-2023 Santa Claus Rally, which included the final 5 trading days of December 2022 and the first 2 of January 2023, the S&P rose almost 1%. And as you can see from this chart here, most of the time you do get a Santa Claus rally. Since 2002, 1, 2, 3 years have been red. In 2018, it was really red. In 2021, you were really green, up over 5% during the Santa Claus rally. So most of the time, about 80% of the time, a little bit over that, you are green during this Santa Claus rally period. But again, I'm really not expecting anything too crazy for our markets, but it is the possibility given fund managers are massively underperforming. And again, the bullish option positioning in Tesla stock, that also looks pretty good. But without a definitive catalyst and really no economic data, no earnings for the first time since 1997, this time probably is going to be a little bit slower than normal, at least during this upcoming week's Santa Claus rally. Let me know what you think about Tesla stock this upcoming week. Do we see a Santa Claus rally? Do we see coal in our stockings this year or in our portfolios? Let me know what you think down below in the comment section. Hit the like button and subscribe to the channel if you made it to the end of this video. If you guys want to come trade with us live in real time in this upcoming week and future weeks, hopefully do very well over there. We have been doing very well. Knock on wood, everything continues to go well. Guarantees are not that you will make money. There's a greater chance you probably lose all of your money if you're not disciplined and you don't have risk management. So make sure you're very careful if you do come and join us as well. We're not exactly doing risk-free strategies over there. Nonetheless, come check it out. Come talk to me over there. come trade with us, come talk to everyone, get involved, come learn, come grow, come trade with us. Link down below in the description of this video. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.